Snapchat. You know we all use it. Come on now. Let's not play around. Let's not beat around the bush here. We're talking about the earnings today, though. Okay? Stock was down 1.5% in the normal trading session. Seeing a 7.5% decline after hours in trading after an earnings report. So we'll take a look. There's a lot to decipher, obviously. At one point, it was down over 10%. Because there's a lot going on here. So a lot going on because, well, stock going down this high. But you think about it and you hark out to previous weeks where you see Facebook report earnings with massive beats in terms of profitability as well as a revenue line, and obviously stuff like Google where Snapchat's making a majority of the revenue off of advertising as well. Google saw massive increases in revenue by advertising as well. So you wonder if maybe they somehow missed expectations, but we'll take a look. So off the initial numbers, you see a non-GAAP EPS of 9 cents is a beat by 2 cents, and a GAAP EPS of negative 8 cents is a miss by 1 cent. Really nothing crazy in terms of that line there. It's a company that always has been a negative earner. They do not make profit. Not a shocker at all. So there's nothing crazy there. A revenue of $911 million is an increase of 62% year over year, and a beat of $56 million. That's really nice. That's a really nice number there. I mean, in terms of revenue, it's a massive beat. It's what we saw similarly with Facebook. So not a shocker. All the other companies doing some good stuff. Global daily active users came in at 265 versus a consensus of 257. So there you go again. And a guidance of 242 to 244. They were low ball on that guidance. So they beat it though. Average revenue per user came in at 344 versus a 334 consensus. Pretty nice stuff. Going into a little bit more detail. We see obviously revenue jumps. GAAP losses were more than cut in half compared to the prior year, which is nice. Came in at a net income line of negative $113 million. Not beautiful, obviously, but compared to the prior year of negative $241, quite an improvement, no doubt about that. We saw daily active users rising 22%, and topping expectations, which was nice. Daily active users rose sequentially and year over year in each of North America, Europe, and the rest of the world. They also grew on each iOS and Android platform, so, both things. Snapchatters opened the app 30 times a day in the fourth quarter, apparently. I've opened it quite a bit, I can't lie to you. And on the Discover platform, over 90% of U.S. Gen Z population watched shows and publisher content in quarter four. Over 90% of people, I would never even go on the screen. That screen is cancerous. I can't lie to you. If you're watching that screen, I'm sorry, but you're part of the problem. Who watches that crap? There's so much garbage on that side there. Ooh, it's rough. It's rough out here. I'm sorry to call you out if you're into that stuff, but there's a lot of trash on that that side. I don't touch it. Don't touch that side. Daily time spent by Snapchatters over 35 rose by more than 35% too, though. So we're getting the older gang in here too. Operating cash flow improved by $14 million, obviously. And for a quarter one guidance perspective, they're expecting revenues of $720 to $740 million, pretty good, and an EBITDA line, which is adjusted, by the way, probably of negative $70 million to negative $50 million. What? That's not that good. That's not a good guidance there. That's an adjusted line too, so I don't know if I personally am a fan of that. And again, analysts were expecting positive, and last year's was negative 81. So you'd expect to see better of a guidance than that, or at least better performance. But again, they could still put up a better performance. This might just be weak guidance by them. And I think that could be why the stock's seeing some turmoil right now, because it's kind of weak. I think that's a possibility. So we'll look at the earnings slide, see if we find more about this. Maybe there is more. Who knows? We look at these slides, see if there's anything crazy that we're seeing. As far as highlights, obviously daily active user, we saw that. We saw that number. We got all of it. Yeah, that's dope. Obviously, business highlights continued. 200 million daily active users engage with the augmented reality, which I assume is just the filters. I assume. I don't know. I guess. So, obviously, crazy stuff. They're really focused on this augmented reality and filters. We'll just call it filters here. So, big focus for them. Revenue by geography, you see increase pretty well everywhere. Pretty nice to see that. Global, North America obviously leading the way. Europe, I mean, they saw increases everywhere. Good to see there. Average daily active users continues to rise. North America is rising at a smaller rate, only a 6% growth though. Europe, 10% growth, and the rest of the world, 55% growth is pretty dang massive. So I don't know if they open it up to a certain country maybe, and then they're seeing extra. Whoa, what the heck was that? You're playing games with me now. Too much back. Average revenue per user, you see growth pretty well everywhere besides the rest of the world, which you saw a bunch more users, but average revenue per user then fell 18% after that. So average cost of revenue, you're seeing that actually saw a little bit of a decline. Not too bad there. Adjusted operating expenses, again, saw a little bit of a decline. Good to see there. Net loss, this thing's all over the charts here. It's tough to say whether you see improvement there, but I think you can say you've seen some improvement. Still a negative 113 million number, but you've seen some improvement, obviously. You can't deny it. Compared to Q4 of last year, absolutely. So, but again, I want to see more of an in-tune, turn into profitability when Q2 was horrible this year. Q3, not that great either. Q4, in decent shape, but I want to see where it can... I want to see if they can improve that to actually some profitability there. That's a big thing. Operating cash flow, they saw a positive line in Q1, but obviously from there, negative, and negative. Guidance was light, as we saw. That's about it for these earnings slides. Do want to look at the balance sheet from an assets perspective. Total current assets. I'll look year over year, which is the far left and the far right, just so you know. Sitting at $3.3 billion. That compares to $2.6 billion of the year prior. So growth there, which is nice. Total assets in general at $5 billion compares to $4 billion. Again, that's mostly because of current assets, so improvement there. Total liabilities, though, also saw quite the rise, $2.7 billion versus $1.7 billion. So overall, not exciting stuff. Stockholder equity sitting at $2.3 billion compares to right under $2.3 billion of a year prior. They didn't see any balance sheet movement this year, and again, there's some excuses that can be made, but my concern with that is if you look at all these other companies that were extremely benefiting by this, and they have been too, you've seen profitability has been fantastic, yet Snapchat just hasn't done it. They haven't done it, and this balance sheet is... It's not weak, but it's not beautiful. It's a small balance sheet, not loaded with much at all, and you'd expect a higher equity line out of what these people are doing year over year. I wanted to see more improvement, frankly. If I'm an investor, I want to see more improvement. They put up, I mean, this is a company trading at a market cap of $86 billion with annualized revenue around $3 billion this year. $3 billion in revenue, a market cap of $87 billion. It just doesn't seem right to me. I don't think the stock is worth the value it's had right now. And it's a stock that's risen incredibly over the last year of 260%, and I don't think they've earned it. You've seen a lot of user growth, but every one of those social media companies has. They haven't seen profitability growth, though. Where's the growth there? I want to see that balance sheet turn better before I would consider this company. That's my opinion on the matter. Whatever, if you've won some money on this stock, I'm proud of you. But again, this decline is not unexpected with weak guidance in terms of profitability. You want to see some growth for once. Shoot! But I do hope you have a great day and you have a great, great, great evening.